perhaps could be some respite where the equity markets are concerned. And of course, with the weakness in the last 2 months, we think that valuations are a lot more attractive at these levels where the global equities are concerned.
Do we increase the defensive tilt in portfolios considering the recent events in the past 48 hours?
I don't think the events in the Middle East will have a major negative impact on global equity markets, and they don't usually have, right? And on top of that, the Middle East is no longer as prominent as before, where the impact on oil prices are concerned. In fact, I mean, if you look at the Russia-Ukraine crisis, that was a much bigger conflict. There was a conflict that has bigger imperative where the global equity markets are concerned, and yet 2 years after, markets are actually a lot higher than where they were prior to the outbreak of the conflict itself. So I don't think the equity markets are likely to take this and say, hey, you know what, because of the conflict breaking out, let's actually take a breather and come off a little further from here. I really don't think so.
Don't you feel, though, that perhaps there are some who believe that they're being a little bit too cavalier about the repercussions of all of this? We were talking to a guest earlier who said that this is the worst since the Yom Kippur War. There were this is the biggest atrocity and the largest lives that were lost on Israel's side since 9/11, even parallels with the Holocaust. There will be repercussions here in the region, especially if Iran is implicated.
Yeah. If the conflict spreads and Iran gets into the picture, if the Russians get into the picture as well, if there is another front open up with Hezbollah coming through, then on a very short-term basis, you'll probably see oil prices spike up a lot more because there is a potential for Iran to actually close off the Hormuz Straits. That in turn might actually impact oil prices. But again, I think the impact is likely to be on a short-term basis and not on a medium to longer-term basis.
That's sort of weirdly the surprising thing, is it not? Even though oil surged another, I think, 4+% overnight, we are still well off year highs of 95 on Brent last week, despite what's happened in the last 48 hours, right?
Because the biggest consumer of oil is still China. And if the Chinese economy does not recover, demand for oil from China is not going to go up back to where it was, towards the end of last year, early this year.
So let's talk about China. What are the prospects for recovery in Q4? Because we've been tracking, among other things, credit allocation, where authorities in China are pushing credit. It's not so much into property anymore, it's into manufacturing. Does that bode well for recovery?
Yes, to a certain extent, but don't forget that property is still the biggest part of the economy at this point in time, given its relations to the other supporting industries as well, right? So for the Chinese economy to recover, the overhang on the property market must be dealt with. At this point in time, the Chinese government is providing stimulus, but in a very gradual and modest pace. And that's why the recovery in the Chinese market has actually been very, very modest at this point in time, right?